Welcome on board, brothers and sisters, to this special webinar titled Legal Documentation in Islamic Finance versus Conventional Finance Contracts. Are they distinct, similar, or worse? Now, the Islamic banking and finance industry has functioned within a framework that, on one hand, is cautious about risk, right? While on the other, strives to maximize returns at all costs. This is one of the reasons why debt-based contracts like Rabiah have become the most widely used financing tool provided by Islamic banks. Unfortunately, or perhaps fortunately. Supposedly, Islamic financial institutions have at times used tweaks and tricks in agreements in order to secure a financial advantage over customers and financially overburden them. Now, for such reasons and more, market participants have critically questioned the true intentions of Islamic financial institutions. They have raised concerns about how well these institutions align with Shariah's principles of fair and just financing. Do these claims have any validity? What is the Sharia stance? What is the stance of Sharia experts in the industry, both nationally and internationally, on these issues? Are they satisfied or content with the current state of affairs? Or do they advocate for significant reforms? These are some of the key questions this webinar aims to address. Now, the field expert with us here today to address these concerns is none other than Professor Dr. Engku Rabiah Adawiah Engku Ali, a distinguished academic and expert in Islamic banking, finance, and law. She is a professor at IIUM's Institute of Islamic Banking and Finance, known as IIBF. Additionally, she is not only a member of both the Central Bank and Securities Commission of Malaysia, but is also the deputy president or the deputy chair of both regulatory bodies. Since holding a first-class honors LLB and LLBS, LLB Shariah, and a Masters of Comparative Laws from the International Islamic University of Malaysia, and a PhD in law from the University of Aberdeen, UK. She has since gone on to publish several books, articles, and chapters in various academic journals, and has presented at numerous international and national conferences and workshops on Islamic finance. She also serves as a Sharia committee member for several financial institutions. Prof. Engku Rabiah has been recognized for her contributions to Islamic finance, receiving the Most Outstanding Individual Contribution to Islamic Finance Award twice, once in 2004 and another in 2014. She has also been listed as one of the most influential women in Islamic finance, including ranking in the top 10 women in Islamic finance in 2014 and 2017, respectively, and the top 10 most influential women in finance in 2017. She has been ranked as the third most influential woman in Islamic finance in 2018 and 2019. Brothers and sisters, please join me in virtually welcoming Professor Dr. Engku Rabiah. Right, so this is where we hear the virtual claps, inshallah. Right, now, Prof. Engku, is Prof. Engku over here?
Yes, thank you.
Wonderful. Well, welcome on board, Prof. Engku. Very delighted and honored to have you today. For taking from your time to make it to this lovely session. Right, now before we delve into the crux of our discussion, we have with us another special guest who is here to give us some key insights on the topic based on his vast experience. He is a distinguished figure in Islamic finance, holding a PhD and MSc from INSEF, Malaysia, and serving as an IOFI certified Sharia advisor and auditor, CISA. He's the founder and CEO of Adil Advisory Malaysia, specializing in Sharia advisory, consultancy, and training services. He is the co-founder of IFA Consultancy, a pioneering institution promoting Islamic finance through training programs, workshops, and consultancy services. He's none other than Dr. Mufti Yousuf Sultan, who I would have the honor to welcome to make the opening remarks. Mufti, tafadhal.
Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you so much, Brother Muhammad Sano, for the kind introduction. And thank you so much, Professor Engku Rabiah Adawiah, a very respected individual in the Islamic finance industry, to accept our invitation for this very special webinar. I would like to also thank and welcome all the participants today from the different parts of the world. I can see Bosnia, England, and definitely Malaysia, and perhaps many other countries who have been here joining from the different parts of the world. The topic today, which is legal documentation in Islamic versus conventional finance contracts, either it is distinct, similar, or worse, I think carries a very significance in the Islamic finance industry. And why it is so? Because the rights of the parties or the stakeholders in any financial transaction starts with the contract. Sharia has emphasized a lot in terms of having proper contractual documentations. If we refer to the verse 282 in Surah Al-Baqarah in Al-Quran, the longest verse of Al-Quran, it mentions, Bismillah ar-Rahman ar-Rahim, Ya ayyuhalladhina amanu idha tadanaytum bidaynin faktubuhu. When you deal with a debt contract, dain contract, then please write it. And dain here refers to any deferred responsibility. Either it's a service or a commodity or an asset or a price. So Allah subhanahu wa ta'ala instructs us to write it. And He also mentions, وَلْيَكْتُبْ بَيْنَكُمْ كَاتِبٌ بِالْعَدْلِ. A person with justice and fairness should write it. We can further look into other verses. For example, the very first verse of Surah Al-Ma'idah, where Allah subhanahu wa ta'ala mentions, Ya ayyuhalladhina amanu, awfu bil-uqud, O believers, fulfill your contracts, your agreements, and the likes. And in fact, in Hadith, Rasulullah sallallahu alaihi wasallam mentioned 3 signs to detect a hypocrite, a munafiq. And he mentioned ayatul munafiqi thalasun, and one of the thing he mentioned is إِذَا عَهَدَ غَدَرَ, and وَإِذَا وَعَدَ أَخْلَفَ. When he agrees, he agrees to something, he breaches the agreement. When he makes a commitment, he breaches the commitment, and so on and so forth. So the rights and obligations that we have in the financial transactions come from the contract, and hence the contracts have a very profound place in Islamic finance as well. If we refer to the fiqh books that has been authored by the Muslim fuqaha over the centuries, we will always see that they started the buyu', the mu'amalat with buyu'. Buyu' means trades or sale transactions. And before they start with buyu', they will always start with uqud, the transactions, the transacting parties. What are the conditions of the transactions, and what are the conditions of offer and acceptance, and so on and so forth. Even, for example, the conditions that we have within the contracts, the khiyarat, the options, and this and that. So I believe contracts really have a very profound place when we'll talk about Islamic finance. Now, the issue that we have today is we work in a very conventional setting. We have legal jurisdiction in every part of our world. We have our own legal system. We have laws and legislations and guidelines, etc., by the regulators as well, a lot of guidance and circulars. So how we fit in from the Islamic finance point of view, what are the issues we may have? I think we would be very interested to hear these from today from our very respected speaker, Prof. Engku Rabiah Adawiah. She comes with a long experience, and I really look forward to hearing some interesting discussion here, as well as I encourage our participants to engage into discussions as well as ask the questions. And yeah, I think with that, I would end my opening remarks here. Thank you so much. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you very much, Mufti, for that the dynamic introduction. Inshallah, we look forward to ameliorating the status quo within the industry. And obviously, we have with us Prof. Engku Rabiah to give us some insights, some further insights on what needs to be put in place, bi'idhnillah. With that, as Mufti mentioned, brothers and sisters, we want to ensure that this is an engaging session, right? So do prepare your questions from now, right? And if it is the case that Prof. Engku addresses these questions as we go along, then alhamdulillah. If not, then towards the end of the session, we will have a dedicated time with Prof. Engku, right? I won't be selfish, don't worry. Inshallah, I won't be asking all the questions today. Hopefully you, the participants, can ask some very challenging questions as well, right? Prof. Engku is one of the sharpest professors that I know. So let's try our best. There's la haraj, yani, no issue. Right? She has no fear for challenges. All right. So with that, let's begin. First question, Prof. Engku. I think let's start with a more general question, right? So, or perhaps let me even take it a step behind. Let me start off with a story, right? So I was with a friend the other day, and we went for shawarma, right? I'll be honest, we went for shawarma. I prefer chicken shawarma over beef shawarma, right? And while we ordered our food and we sat down and we're waiting for the order to come, two individuals walked into the restaurant. One of them was a lecturer, and the other one was the friend of the lecturer, right? And we said our salams and whatnot. And the friend of the lecturer asked me what I'm doing in my life. I told him I'm a PhD student at INSEF. I'm studying Islamic finance. And as soon as I said Islamic finance, he said, "Yeah, akhi, what are you studying? Islamic finance is just the same as conventional finance, and you're wasting your time." And obviously, I was shocked. I told myself, am I wasting my time? This man is out here accusing me of wasting my time, right? And not just 5-10 minutes, no, a 4-year degree, right, in a particular field, right? So I asked him I was curious to know why he believed that these two fields are identical, right? And I posed the question to him, and he said the contracts are identical. There is absolutely no difference. In fact, the contracts of Islamic finance, the Islamic finance contracts are worse off compared to conventional finance, right? And that was his statement, right? So I was obviously very upset. So I went back home. I meditated over the subject matter. I did a little bit of research, and I told myself, I know someone who is well qualified to address some of these issues, right? So today, let's perhaps try to see and unpack whether conventional finance and Islamic finance contracts are indeed identical, or if there are any fundamental differences between them. And hopefully Prof. Engku can help us make up our mind on this issue. So the question I would like to pose to start off the discussion is, we know that contracts that are built on usury, riba, right? Contracts that are built on maisir, contracts that involve excessive usury, contracts that lead to an unlawful outcome, the selling of wine, the selling of pork and whatnot. These are all prohibited by the Sharia categorically. Aside from these clear issues, Prof. Engku, what are some of the other elements within a contract of Islamic finance are necessary, right? What are some of the features that distinguish an Islamic finance contract from a contract that is not Islamic, a conventional contract, essentially? That's the first question.
Okay, Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen wa bihi nasta'in. Wassalatu wassalamu ala Rasulillah wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Subhanaka la ilma lana illa ma 'allamtana innaka antal alimul hakim. Okay, first of all, I would like to thank Brother Muhammad Sanu for a very kind and generous introduction of myself. And I would like to also thank Dr. Mufti Yousuf for his welcoming address. So basically, I was also happy to see the audience coming from various jurisdictions, and I think they perhaps from various backgrounds as well. Now, I really like the scenario that Brother Muhammad shared with us just now, and which is actually a very real scenario. A lot of people have a lot of misconceptions about Islamic finance and the behavior of Islamic finance. And I think that's because of many reasons. One of that is perhaps the perspective or the angle or the context from which the person is assessing and looking and evaluating Islamic finance. When you say there's no difference, I think most of the time that would be 100% true or almost 90% true if you look at maybe to some extent the commercial behavior in terms of, if you look at, maybe you ask, what's the rates for this financing in a conventional bank, and then you look at Islamic rates, maybe you can see that the rates are similar. So in terms of the commercial outcome, the obligations, in terms of the on the surface, it looks like very, very similar, right? And then if the conventional has home financing, you have home loans, and you have some home financing and car financing, all those things. So you can see the range of products also very similar. So to that extent, maybe there's it's less logical for people making that kind of conclusion. But if you look at the details, and also the more complicated aspects of the transactions, actually it's not totally the same. There are differences, especially in terms of the underlying contracts, the behavior of the contracts, and also you would only perhaps notice the main difference in situations where there is problems with the parties in performing their obligations, because the remedies to redress those issues, let's say defaults and whatnot, maybe a different treatment. If you're talking about a smooth sailing, I mean, you just pay, everyone is paying dutifully their obligations, and you just look at the rates, you may think that it is similar. But the actual rights and obligations is tested when there is disputes, when there is default situation, recovery actions and things like that. So you can see there can be actually differences between an Islamic and conventional contract. And why that is so is because of, initially I just want to also step back and explain that Islamic finance and banking, to some extent Islamic banking has been introduced to provide a Sharia compliant alternative to a conventional banking. So if you look at the conventional banking, the main issue that is objected to from the Sharia compliance perspective is basically the issue of sorry, there's a lot of things popping out on my screen. I don't know whether you can see it or not. Okay, you don't see it, then that's fine. Okay, so basically in terms of the main objections against conventional banking is about the elements of riba, and to some extent there are a lot of things in conventional finance which may not be certain to the client, so that you don't really know the outcome of the transaction. To give a simple example, if a person takes a long-term home loan from a conventional bank, first of all, the rate normally is floating. So the borrower does not really know the full extent of his obligation to the bank. It depends on the rate. So if the rate spikes, for example, maybe the borrower will be caught, hand that, that, oh, I have to pay much more than I expected to pay. So that's a kind of uncertainty that you see, because the interest rate that the bank charges normally is determined by the bank, and it can move from year to year, or from a certain periodical time to the next. And there's no ceiling, or there's no floor to that movement of the interest rate. And another thing is because of the underlying contract between the conventional bank and their customer is just a lending and borrowing transaction. So it's a money for money kind of transaction. Bank lends you money and then you repay the bank money. But when you talk about an interest-based or riba-based transaction, the repayment will always involve an additional amount. And from the Sharia perspective, that additional amount, whether it is small or big, it is riba and is prohibited. Okay, because the contract is just a loan. I give you money 100. Why should I pay you more than 100? I just benefited from a money worth 100. So from justice and fairness perspective, I should be obliged to return me the same amount so that you can get your 100 after you have lent me 100, because it's a pure loan contract. Those from the conventional side, they will argue that, well, there's time value of money and all those things. You have deprived me of the opportunity to gain from the money during the time that I've lent the money to you. From the Islamic perspective, time has value, but time does not necessarily mean always a positive value. When you keep your money to yourself, I mean, you may gain or you may lose the money depending on how you use and the movement of the value of that money in the market and things like that. So time has value, but it can bring negative or positive value. So it's not necessarily positive. So in an interest-based argument, time value of money, the capitalists will always have a positive return. When time actually can give positive and negative. So basically the capitalist is transferring all the risk to the borrower. Okay, so that's where Islam says it's a kind of zulm, a kind of injustice on the borrower. So from Islamic perspective, if the bank is lending under a loan contract, then that loan must always be a benevolent loan called Hasan, meaning that it's 1-to-1. If you give 100, then you pay back 100, you cannot charge anything over and above that 100. If you charge more, that is riba. So that's a very big difference. So if you have a loan contract in an Islamic transaction, you will never have any additional amount added to it if you want to make it Shariah compliant. Okay, so that's one thing. And then when we have Islamic banking, Islamic banks, they are not actually, they are commercial entities. This we have to make clear. They are commercial entities. They enter into Islamic banking as a business. So definitely they are not going for a loan contract because it's not going to generate return to them. So if a loan is more like a charitable act, you give your borrower charity in the form of time to use the money. Okay. So that's why if you were talking about the financing, which is based on Qard Hasan, normally the source of fund would come from something which is charitable. So that's why we can see some Islamic financing, like Islamic microfinancing, they do have some Qard Hasan kind of financing, but their source of fund would be something which is not expecting return. Like for example, we can have some kind of Islamic social finance funds, which can be generated from some kind of zakat allocation. It can be also from some wakaf allocation. It can be from some other charitable allocation. So the funder of that fund is not expecting additional return. So then you can lend it to the entrepreneur, for example. Entrepreneur just pay the exact amount. If it's from zakat fund, sometimes you can have waiver even of the principal in certain situations. Okay, so that's something else. But if you're talking about commercial banking, they're looking at contracts that can generate return to the bank in a Shariah compliant manner. So that's why they go for buying and selling contract. Earlier on, Dr. Yousuf mentioned about the first chapter normally in any classical fiqh book would be Kitabul Buyu', the book or the chapter on buying and selling, sale and purchase or trade contract, because that's the most common contract, which is common. I mean, you go to any economy, it's about trading, buying and selling, manufacturing, and for the purpose of selling those products or services, right? So buying and selling is very important. So it's something which is allowed in Islam. So when the banks want to do buying and selling, it's fine, but you have to observe and comply with the rules of buying and selling. So if a bank wants to sell, the bank must have to have ownership of the asset first. So conventional bank, under the normal regulation of conventional bank, they cannot buy assets and sell assets, except for the asset where you're going to use for their banking business. I mean, their building, they can buy those kind of assets, but they cannot do buying and selling as a business for the purpose of banking. If you look at definition of banking from conventional sense, it's just lending and borrowing. But Islamic banking, they allow for a banking business to involve buying and selling, leasing, a partnership arrangement, joint ventures. So we have a lot of flexibility there. So what banks, Islamic banks must do, they must buy the house, sell it to the customer. They must buy the commodities, the car, and sell or lease it to the customer. So we look at this transaction, that means the kind of risk profile of an Islamic bank will be different. They have to buy assets. So however, momentarily they are buying those assets and then they sell to the customer. Sometimes they hold the assets longer in a lease financing arrangement. So you buy the asset, you hold it and you lease it to the customer. So the bank's risk profile will be different. You are owner of an asset. So there will be some risk related to asset that is attributable to the bank. There are some risks, of course, on the customer in terms of the obligation to pay, in terms of the utilization of the assets and whatnot. Okay, so that's one of the things. I don't know how long I can go to explain about these things.
Perhaps,
Yeah.
yeah, perhaps let
Yeah.
me interject with a question over here. So
Yeah.
so from all you've said, I
Yeah.
think what I've understood from this, right,
Yeah.
and correct me if I'm wrong, is the fact that whether whether a person is a Muslim or not a Muslim, right, there are certain things that are just humanly required, right? Whether the sister's name is Aisha or Catherine, Catherine, I'm not familiar with the name, right? Whether your brother Shadman or brother John or Peter, right? You still need a house, right? You still need a car, right? And the way to go about it is to acquire financing, right? Unless other options are available to you. So it's not the case that it is the case that on the surface level, we might see a lot of similarities between Islamic finance and conventional contracts, but the differences, as you've highlighted, Prof. Engku, is in terms of the fundamental or the deeper when we analyze the contracts deeper, right? So the follow-up question I have on this note is as follows: to what extent, right, does the Sharia allow for the use of bending, or the term, I think the correct term is hila shar'iyya, right? Tricks or contractual structuring so as to produce a lawful outcome, right?
Yeah.
So we know these the tool of, for example, combining of contracts, right? Where some have used the contract of, like, I think the best example would be the contract bay al-ina, right? Which is a buyback, right? I sell a particular asset to let me see, the bank sells a particular asset to me at a particular price, and then I sell it back to the bank for a lower price, right? And in that sense, the bank would profit from this particular sale. But there is no genuine transaction that has occurred. It is simply a loan disguised as a bay', right? So bay' is allowed, whereas interest taking or giving is not allowed, right? So the question I'm really trying to unpack over here is, to what extent does the Sharia allow for the use of the combination of contracts, the hila shari'iyya, to produce a lawful outcome?
Okay.
Is this the question? Does it make sense?
Yeah, sure. So basically, if you look at the under normal situations, generally we will do a contract in order to achieve a particular purpose. Right? Let's say, for example, like you said, everyone needs a house. So when you need to use a house, you have the two choices. In some jurisdiction, it is more economically sound to buy a house. But in some jurisdiction, actually, it's more economically sound to actually lease a house. You don't buy. Like in Japan, they prefer to lease rather than to buy, because maybe they have easy relocation and then the extremely high property prices. Okay, so depending on whichever the preference of the customer, given the context of where they are, so I think it would be reasonable for Islamic Bank to provide, like a home financing that allows you to acquire the house, or a home financing that allows you to lease the house from the bank, right? So that's why we have for home financing, it's common to have like murabaha, or you have ijara home financing, lease home financing, or a purchase kind of home financing. So the bank will buy the house and sell to the customer, where the customer can pay on deferred payment terms. So the customer will pay installments to the bank over a certain period of time. If you're talking about leasing, the bank will buy the house and then lease to the customer over a period of time. At the end of the lease, depending on whether the customer wants to own the house or the customer don't want to own the house, if they want to own the house at the end, there can be a sale of the house to the customer at the end of the lease tenure, right? So that's fine. I mean, if you have that kind of purpose, we can have, commonly available contracts, like sale for acquisition. Even if the asset is under construction, you can do istisna contract. Or to some extent, you can have salam contract in order to effect a forward purchase of certain commodities. Okay, so But the problem is if the purpose of the party actually is just to get cash. Okay, so the most natural contract, if you're talking about, if a person needs cash, then let's say for consumption purposes, but you don't know yet, what kind of consumption that, you can do a murabaha with them. You just need something maybe to, for various things. So it's not like feasible for you to just identify each and every one of those things that you want to do. So something like a personal financing kind of thing. So what you need is cash. So under Islamic principle, normally it would be like just a loan contract, yeah. But if it's a loan contract, you're not going to get any profits, yeah. So if the bank wants or can afford to be charitable, definitely they can just do a qard hasan for that kind of needs of the customer. But then, given I mentioned earlier, because this bank is set up as commercial banks, so they have their shareholders, they have their depositors that they have to actually give their profits and all those things. So it's not an option that maybe Islamic bank would want to have in the long run. I mean, they don't go for qard hasan, okay? So can you have a kind of hila where you can actually give some kind of financing and then you can still make money. Okay, so that's why in some we have some earlier products where they have this ba'alina thing. I think even in the past we have seen these situations, especially if you look at the Bukhara region and the Yemen, as where they have this arrangement, I think ba'al uhda or ba'al wafa, basically where the person needing cash actually cannot find somebody who's willing to be charitable to give qard hasan, so they need cash. They have some assets, so what they can do is they will sell those assets, maybe land, in order to get money, and then but they need that asset still, so they will make a promise to buy those assets back later from the buyer. And then it is called by al-uhda or al-wafa. You make a promise to buy, and the seller also make a promise that, okay, I will not sell this asset to others, and if you are able to buy it back from me, I mean, normally the price would be similar with the original price when the buyer when this buyer buys from the original seller, right? So this is allowed by the for the al-wafa by the Hanafi scholars at the time in the Bukhara region, because they see that it's a need and it's kind of solution for the cash liquidity needs of the society when the rich sides of the society is not willing to be charitable. I mean, maybe in the old time, there are many people who wants to be charitable. Now there are some people who don't want to be charitable that much. So while the asset is sold to the buyer can enjoy the benefits of the asset. Okay, so at the end, when the original seller buys back, he managed to buy back at the original price. Okay, so it allows the original seller to get the cash that he needs. And but al-uhda was allowed by the Shafi'i scholars in the Yemen region, also because of the same needs that they observe in the society and the change in the behavior of the society. Because sometimes, these rules, I mean, they have rules, but the extent of the society's their behavior, their appetite to risk return and charity will determine the kind of the solutions to be given. Okay, but of course, this ba'al wafa ba'al huda is not allowed by other schools of Islamic law. For example, we see the Hanbalis, the Malikis, they are not keen of allowing this thing because they consider this as hilah muharramah, the prohibited hilah, whereas for those Shafi'i and also the Hanafi scholars, they consider this as makhraj, as a solution, and hilah syariah, the allowable hilah. Okay, so in modern time, we see similar recurrence, but now instead of using, I mean, to some extent, we can see some structures similar with ba'al wafa or ba'al huda. Like we look at sukuk ijarah, the originator sells those assets under the ijarah and to the issuer, and then it's being leased back to the originator, and there's a promise by the originator to buy back the asset at the end of the sukuk tenure. Okay, so some similarity with Ba'al Uda, Ba'al Wafa. So now coming to Ba'al Inah, of course, we have seen texts from the Shafi'i school saying that Ba'al Inah is allowed, but they put in conditions because the main premise in the Shafi'i school is that when you do buying and selling, it is allowed. وَأَحَلَّ الْبَيْعَ. Okay, so when we want to say that buying and selling is not allowed, there must be strong arguments to say that there is an intention which is against the original meaning of buying and selling. Okay, so as if you look at the text in the Al-Um of Imam Shafi'i, he mentioned that okay, where people were asking if somebody were to sell, let's say I'm selling to Muhammad, okay, for 100, okay, and then after a while I want to buy back from Muhammad, maybe at 100 or perhaps a different price. Okay, so is that wrong? Okay, so basically, if there's no other evidence to suggest that there's anything wrong with that, then it should be permissible. It should be valid. Okay, the same like if I sell to you and then after 1 year I want to buy back from you and you're willing to sell back to me, it's fine. Okay, so if I change my mind in 1 minute and want to buy back from you, why shouldn't it be the same with the previous one when I want to buy back after 1 year? So that's the whole argument. So that's why if you make it clear that what you intended is not just buying and selling, but trying to make a hila, like you say, I'm selling to you, provided that you promise to sell it back to me at a certain price. Okay, so then there is zahir, it becomes apparent that we are not really intending sale, just one normal sale, but you are intending combining the two contracts, and there is interconditionality between the first and the second, then that becomes something which is not even acceptable from the Shafi'i point of view. So that's actually how we look at the phasing out of Ba'al Inah in the practice of Islamic banking in Malaysia, because previously there was this practice, but as you can see, the Shariah governance framework it is initially was not as stringent as it was later. So basically, they just approve on the basis of the selling and buying, but they don't really look at the legal documentation and everything. So now, when they look carefully, actually, there's interconditionality between the first leg of the contract and the second leg of the contract. So when the seller sells, there is actually a condition that the buyer will later sell to the original seller. So then it's not even valid from the Shafi'i point of view. That's why the Shah Council of Bank Negara come up with a number of resolutions to highlight that Ba'al Inah must follow the Shafi'i ruling. And then in the next resolution, they said the Shafi'i ruling means that you need to make sure there's no intercondition between the first and the second one. So both the first sale and the second sale must be independent, stand alone. So let's say the seller sell and then later the seller does not want to buy back, then there's nothing to force him to buy back because there's no condition, nothing at all. There's no strings attached. So this is the one which the Shafi'i say is valid. So if you make it like 2-in-1, then it's no longer valid. Okay, so that actually, when it's clarified to the practitioners, then they understand that the way they do Ba'al Inah before is not really correct. So if they want to do it properly, there's no string attached. It will be some risk to the bank, because when they buy, maybe a customer will not going to buy back, or even if the bank sells some of their assets, maybe they cannot get it back from the customer if the customer don't want to sell it back to them. So they stop in that sense, they stop from Ba'al Inah because they cannot combine the contract in that way, like putting all the strings in the terms and conditions. So what I meant to say is that in order to become a hila syariah, a legal device, it should be like a real solution, which is not like trying to just play around with the rules in that sense. Okay, so this is my conclusion on that. Yeah.
Okay, exactly. I think it's quite clear, right, that Sharia does allow for hiyal, right, legal devices, but only.
And I just want to highlight, because that's why do we allow this, because there's this maxim, al-amru idha daqa ittasa'a. When something becomes restricted and constrained that you cannot move, then it becomes ittasa'a. I mean, you allow for some kind of leniency to allow for some solution, and actually they actually rely on even some evidences, like if you look at, of course, there can be various interpretations to these evidences, like for example, the hadith the tradition, the sunnah of the Prophet ﷺ, when the companion came to the Prophet with the dates, and the Prophet observed that the dates is like very good quality, and he asked that companion, and the companion said, originally actually I have a different type of dates, and I exchanged that dates with this one, 2 sa' for 1 sa', 2 measurement for 1 measurement. So when he explained that to the Prophet, and as you know, dates is one of the ribawi items, so the Prophet said that's riba. So this companion was like taken aback, and then he said, well, then how can I get this good quality dates? Because this owner of this good quality dates will not be agreeable to exchange equal amount, because his dates is of higher quality than mine. So the Prophet told this companion, go to the market, sell it, get a price for it, and use that price to buy the other dates. So the scholar said, well, yeah, there's a prohibition. There's a prohibition of riba in the exchange of these 2 equivalent category like the dates. But the Prophet suggested a way out, which is like you sell, and the end result will be the same, right? You will get the good quality dates, but there is this intermediation of buying and selling with another by selling to the market, get the price and buy the other one. And they also use another example even in the Quran, where if you remember the story of the Prophet Ayub alayhi salam, when he was tested by Allah subhanahu wa ta'ala with the disease, and his wife was caring for him and all those things, and then suddenly in one moment of inconvenience, and perhaps that caused him to be angry with his wife, so he said that if he recovers from his disease, he will actually hit the wife 100 times. Okay, and of course when he recovered from the disease, he regretted for making that oath to actually punish his wife with 100 lashes. So as a solution, again, makhraj, the rule is he has to fulfill his oath by actually doing that 100 lashes, but Allah give a solution by saying that just take just take 100 pieces of hay, and they just pat your wife with that 100 pieces of hay once. Okay, so that is considered as expiation from the oath. So you can see there are solutions which is like a legal device like hila to overcome the difficulty of fulfilling the actual strict requirements of the law, right? So al-amru iza daqa ittasa'a. So they have basis for that, but of course for those who are against hila totally, like the Hanbali and the Malikis, they have a different argument for that purpose, in this regard.
Wonderful. Okay, thank you very much for that comprehensive, I would say, right, explanation of when a legal device is considered allowable, right? It is in instances where the intention is not to produce something that is unlawful indirectly, right? So I'm intending to get riba, but I'm going to use a combination of Islamic finance contracts that are...
that is not allowed, because you're intending to get riba. That's not allowed.
Because the intention really matters in Islamic finance contracts. Another thing you mentioned is with regards to where necessity, right, kicks in, or even difficulty, very constraint, right, kicks in.
Hardship, we call it hardship.
Yes, thank you. That's the word I'm looking for, right? In those situations, right, there would be room for leniency or acceptability, particularly within the field of mu'amalat finance, right? So I think what we can do next is perhaps I'll give you issues that are commonly brought up within the context of Islamic finance, and perhaps you could address them one by one, so as to give the participants an understanding of how all of these issues have been dealt with by the Sharia scholars in Islamic finance, right? So the first issue would be with regards to the difference between actual and beneficial ownership, right? So we know in some contracts, in sukuk al-ijara, I believe, right? I think that's the best example, right? Where you have, for example, government issued sukuk, right? These are government properties that they want to lease out and then get back, right? There is the issue of, in the Sharia, that an asset that is sold needs to be, the ownership of an asset that is sold needs to be transferred 100%, right? Now, obviously, when it comes to government-owned properties, it's going to be quite a challenge to transfer the ownership of a government property over to the sukuk holders, right? So hence, the Sharia scholars have come up with this legal device of beneficial ownership, right? Could you give us a bit more insight on this difference and what renders it acceptable?
Okay. First of all, I would like to just correct a bit. Beneficial ownership is not a legal device introduced by the Sharia scholars. It's a well-known principle under the common law. Yeah, and then there are a lot of story how it comes about. But I think one of the things that I've heard under the common law is actually an instrument they say which is introduced by equity. Because they say the common law, sometimes you apply the common law, which is the strict law, it becomes too harsh, and the equity will come in order to provide relief to the parties. So this is when beneficial ownership principle or concept is introduced in the old time. They said that was during the war. Maybe during the war, there's two versions when during the war, and the other is during the time when they have the king. Sometimes they are taking tax from their subjects, and sometimes the tax can be a bit harsh and maybe not too justified. So the people come out with this so-called legal trick or legal device where in order to avoid certain things, like let's say they are asked to go to the war and they don't want that their property or something will be affected later, so they want to transfer it first, or if in terms of tax as well, so they want to transfer, so they do a transfer of the legal title of the asset to another person with the understanding that they still hold the beneficial title. So that means although the legal title has passed, but they are actually still the owner of the asset. All the benefits, everything minus the title is still with the original owner. And they have history how the Court of Equity actually recognized that later and give the right to the beneficial owner. So when we talk about Suku and also Islamic finance in the modern day, you can see that many of the lawyers advising this Sukuk transaction are actually lawyers from the UK or from New York, and they are very much familiar with the English law or common law principle of beneficial ownership. So when they see that under Islamic principle, when you have a buying and selling transaction, then basically the buying and selling transaction from the Islamic point of view affects ownership. So the transfer of ownership, tabligh, happens not because of you register or you do something else, but just because of the contract. Because the effect of the sale contract from Islamic principle is transfer of milkiyah from the seller to the buyer. So the moment there is an accord or conclusion of the contract, ownership will be transferred from the seller to the buyer. So that's from the Islamic perspective. But from the practical perspective, because you are doing this transaction not in a environment or ecosystem where Islamic law is fully implemented, so you are having a situation where you're in a country where we have the normal law, like in Malaysia we have Malaysian law, which is to some extent very much influenced by the English law. So we have to actually see that the milkiyah is protected, the transfer of ownership is protected and recognized by law, so that the parties can enforce their right. So although you say from the Islamic perspective, I have the ownership, but if you cannot enforce your right, then it's not really practical. I mean, your rights cannot be protected, because one of the purpose of maqasid is actually hifzul amwal. You have to protect and preserve the rights of the parties, right, to their wealth. So that's why we are making it clear that the transfer, because there is legal restriction, if talking like say sovereign assets, from the state to actually transfer the asset to the sukuk holder or to the issuer or to the trustee, sukuk trustee, then they have to resort to saying that the seller, which is the state, the sovereign, still retain the ownership, but they will transfer beneficial ownership, meaning that the milkiyah for the purpose of the ownership is there in the beneficial. You can enjoy everything except that you don't have the title. Okay, so you can do transfer, you can get all the benefits from the asset will be attributed to you. Liabilities on the asset, risk and liability of the asset will be attributed to you. Okay, so that's the whole meaning of why they say transfer of beneficial ownership short of the legal title, just to comply with the law of the country. So
I'm sorry to interrupt, but what happens when there is a default or
yeah.
Yes,
And not only that, some of the documents, if you look at the first sukuk ijara transaction from Malaysia, when we have the sukuk ijara and the Malaysian government was selling the assets to the sukuk holders, so Malaysian government actually execute a bare trustee to say that Malaysian government hold the legal title merely as a bare trustee. So meaning that the real owner or the beneficial owner are actually the sukuk holders. So in the case of default, in that sense, therefore, if you look at it, the sukuk holder actually have rights to the assets, and they can actually sell it to other parties and whatnot. So this raises a concern actually. So when the lawyers looking at those things and they can see there's a bad trustee and whatnot, and then they found out that this give rights to the sukuk holder, and therefore sukuk holder actually have the status of like a secured creditor. Can you see? Whereas Malaysian government before that has signed negative covenants with other previous creditors to Malaysian government that they will not create subsequent obligation, in priority to the previous creditor. So when the lawyers saw this previous negative covenant, they say if we continue with this sukuk ijara transaction, you are in the risk of breaching your negative covenant with the previous creditor. So that means it's real. If you actually just do it like that, then sukuk holders will have their rights, and Malaysian they are like secured creditors. But because they have previous negative covenants with other creditors, the lawyers have to advise Malaysian government to avoid breaching those negative covenants. Then they have to make sure that the sukuk holder will not rank in priority than the previous creditors. So what they do, they have the purchase undertaking. So Malaysian government undertake to purchase the assets from the sukuk holder in the case of default and also upon maturity. So if there is default, Malaysian government will purchase the asset from the sukuk holders and they will owe the sukuk holders the price of the assets. So then the sukuk holder will have to rank with the other creditors to get the price of the assets from the Malaysian government. So there's irrevocable purchase undertaking by Malaysian government to buy in the case of default. So that actually makes or actually prevent Malaysian government from breaching the negative covenants with the previous creditors.
I see. So the interests of the sukuk holders are definitely protected from what you're saying, and it's not.
Yeah, I mean, in terms of the complying with the Shariah, they are the owners of the asset. But in the case of default, because they are not to be treated as secured creditor, they then have their rights in terms of they will sell to the Malaysian government, and they are going to have the Malaysian government pay the obligation to the sukuk holders,
I see.
as unsecured creditors.
Wonderful. Okay, so there's secured creditors, and the issue of beneficial ownership is therefore resolved because they have an interest. They have an interest in the asset, and it's not simply the case that they they have a claim. They don't simply have a claim against the government, but they actually have a claim in the asset.
Yeah, I mean, from the beneficial ownership perspective, because the Malaysian government is holding the legal title as a bare trustee for the sukuk holders. All benefits of the asset would belong to the sukuk holders.
Wonderful. Okay, thank you for that clarification. The next point of dispute would be perhaps benchmarking, right? We know that a lot of the, I think you mentioned this earlier, you said when it comes to leasing, for example, in the conventional system, there is no ceiling or floor, right? It just fluctuates based on the market's demand and supply, right? Over in the world of Islamic finance, right? There is benchmarking, right? It is practiced, right? So the question is, if this benchmarking is to the conventional system that is fluctuating based on market supply and demand, and there is no ceiling and floor, then how is this okay?
Islamic, you mean?
Sorry?
Can you repeat your last part of your question?
I was saying the practice of benchmarking, right? Financial institutions benchmarking their profit rates to the conventional profit rates, right? How is this okay, right?
Okay. Yeah. If you look, you're talking about ijara, right?
Yes, in ijara in particular, and other transactions, if you may please elaborate.
Yeah, for Ijara, under the original ruling of Ijara, because Ijara is still considered as an exchange contract, uqud muawadat. So generally, both lessor and lessee should be clear in terms of their obligations under the Ijara. So ideally, the rental and the Ijara should be fixed, and then that's it lah. Because you know exactly this is the amount of rental that you have to pay throughout the tenure. But then we have this situation where the tenure of the lease is long term. So there can be a movement in terms of the cost to the lessor, and there's also perhaps the lessee also may face, because there can be different things that happens lah. So the long term, it can benefit the lessor and also the lessee in terms of the movement. So if the, let's say, the market rate goes down, then it will benefit the lessee if there is a lower rate of rental to reflect the actual market rate at that time. Okay, so long tenure means that the parties may want to see some kind of flexibility in the rental amount to reflect the cost and also the market rate at that time. Okay, so that's why for the long-term leasing, they would have what we call a formula to calculate the rental. So if you look at conventional, normally they don't have they don't really have a need for that, because they just can just change the interest rate as and when the bank likes, right? Based on their agreement with the customer. But for Islamic, because we need to have the requirement against gharar, so we cannot have excessive gharar. So you must know the rental. If not a fixed amount, at least a range where you know that the rental will be not more or not below that range, so that the interest of both lessor and lessee will be protected. So the lower range will protect the lessor and the upper range will protect the lessee. Okay, so that's why they have like, let's say, the formula. So the formula will provide a kind of certainty to the parties that we've used this formula in order to arrive at the rental amount, and both parties have agreed to that formula. So another thing about the formula, the benchmark must be stable and must be something which is independent and cannot be manipulated by any of the lessor or the lessee, so that there will not be a dispute later. So the main issue here is, what is the benchmark that qualifies to be the benchmark for the formula? So in the past, they thought that the LIBOR is qualifying because it's stable, and they said at that time it cannot be manipulated. But it was proven through the LIBOR scandal that actually LIBOR can also be manipulated. So that's why they are no longer using LIBOR as the benchmark. So I think a lot of parties are coming out with their own benchmark. We have Safar, we have Sonia, all those different benchmark. In Malaysia, we have Mayor. Malaysia, for Islamic, we have Mayor I. So we look at the Islamic interbank money market rate and all these things as the benchmark. So what I can say is that even when they were using LIBOR, the argument by the scholars is actually it's just a benchmark to determine the rental rate for the lease of an actual asset. I mean, you're leasing the car, so just to determine the rental rate, and that's the main condition is to make sure that the rate or the rental is certain enough, is to make sure that the benchmark is stable and cannot be manipulated by the parties, right? So that's why now they come out with Mayor I in Malaysia, for example, is regulated by Bank Negara. I don't think it can be manipulated by the parties, and it's based on not forward-looking like the previous LIBOR. It's more of backward-looking, so it's based on the previous price of previous day. So it's quite certain in that sense, yeah.
I see. Okay, so you said the reason why benchmarking the Islamic profits within the Islamic finance institute, within Islamic finance, the reason why benchmarking it with conventional benchmark systems like LIBOR and whatnot is not allowed is because those could be manipulated. If it was the case that they were not being manipulated, right, then would it be allowed? And if it is allowed, then how are we allowing Islamic financial institutions to benchmark based on conventional financial institutions? So it's almost like we are allowing them to set the trend. We are using them as the standard, the benchmark, the reference for us, right? Isn't that
Yeah.
problematic?
Yeah. I actually mentioned two things. One is about no manipulation and stable, the other one I was mentioning also is just used as a rate, as a reference. In
That's
order
the
to
other thing.
know, yeah, basically it's more like because if you look at the way Islamic finance is operating, it's not yet mainstream. It's not yet mainstream. It is actually existing together with conventional system, and ideal in that sense. So we are not dictating the pricing in the market. So when you're talking about competition, it's about Islamic banks competing with conventional, right? So let's say if you don't refer to the conventional rate in your pricing, when you say for your lease rental, then the competitiveness may not be that. I mean, it may be difficult to compete lah, because you are still a player in the same market. And then the customer base, I mean, they have done surveys of the customer base, and they found that majority of the customer base are agnostic.
Okay.
So what they look is just which is cheaper. So if you don't take into consideration the conventional as a reference when we determine our price, then maybe if you're too expensive, they will not go to Islamic Bank. But if you make it too cheap, then Islamic Bank cannot give competitive returns to their investors. So more or less they have to influence each other like in that sense. I'm talking about this one, let's say for the leasing. I mean, we refer to conventional to make sure that we are competitive. But you look at the sukuk market is the reverse. Because the sukuk pricing is tighter than the conventional, so therefore we are able to attract the investors, and the issuer are actually issuing more sukuk because the price is tighter, and that's why, because we have being able to, like in Malaysia lah, I'm not talking about globally, because in Malaysia we have 60% plus actually from sukuk, but if talking about banking side, we are still not yet mainstream. Until now we are about 40%. And globally we are still much smaller. So that's the main thing lah. But from a Shariah perspective, what you are charging the customer actually is the rental for the leasing of the car. It's not interest from a loan. So reference is just like if you are selling, let's say, halal product, you have to also look at the other price in the market as a reference point to determine what is your price, so that you are able to sell your product to the customers. Yeah.
I see. Okay. So then there is no issue with benchmarking, so long as it abides by the rules of no manipulation and
Stability.
Wonderful. Okay. That one is
Yeah.
Thank you. The other issue is the shifting of risk, right? It could be discussed in many contexts, but let me use again ijara, right? Where a lessee, right, the person who is renting the property, right? There have been times where the banks would stipulate that the customer, right, the lessee, is responsible for everything, right? All the maintenances, whether it's minor, major, and whatnot. In some cases, even home finance, or in home financing or vehicle financing, right? Everything is shifted over to the customer, right? You select the asset that you are interested in and bring it to us, and then we're not even going to do any due diligence. We are going to approve the financing based on your credit worthiness, perhaps. And if anything happens during the tenure of the financing, you bear the responsibility. Is that the reality? And what's the rule on that?
Okay. So you're talking about the the nature of the risk sharing lah in the ijarah contract. Okay. I think this is something which is a bit contentious lah. I think there's some kind of changes also in this regard. If you look at the original ruling or original understanding of ijarah, so you have the lessor, you have the lessee. Lessor is the owner of the asset, lessee is just utilizing the asset. So as a general rule, basically risks and liabilities and also return on the asset belongs to the lessor as the owner. But in terms of the risk, expenses, liabilities, and benefit of utilization, that would belong to the lessee. So you can see, because they are using the asset. Okay, so that's the normal demarcation. Okay, so you look at, is this related to utilization? If it is related to utilization, it's on the lessee. If this is related to the ownership, that is for the lessor. Okay, and this is the, if you go along that line, nobody will dispute. Okay, so when this happens, then of course, I remember we were trying to come up with the Shariah standard on ijara. Okay, I mean the policy document ijara by Bank Negara, so they have the drafted based on that, the original ruling. I think even AOF, they have this concept, and then we have the exposure draft being given to the industry, and then we have feedbacks from the industry, and they said that, well, if we were to maintain like that, one of the things is they said that the risk weightage on the asset and then the capital charge on that financing lah. Okay, so so risk weightage, as you know, if you are owner and then you have ownership, then at least you have 100% risk weightage. Okay, if you compare with conventional leasing, because they're just on credit risk, and you say like for the conventional financial lease, they will transfer all the risk to the lessee, right? So what they have is just credit risk. So their risk weightage is just 50% and their capital charge is just 50%. So Islamic would be double more expensive if you do ijara as compared to if you do a conventional one. Okay, so then if that happens, then basically they said most probably we are not going to offer ijara financing, it will be expensive for us, then we will just do murabaha, and then would there be more commodity murabaha, whatever, in order to allow for them to get the 50% risk weightage, right? Rather than just go for ijara because of the 100%, at least 100% risk weightage is not more. Okay, if you're talking about the ownership risk and then you're talking about the credit risk, they will be 150% lah risk weightage you do for ijara in that original sense lah. Okay, so then another thing is if they were to bear the cost of all those things, then banks, being banks as a commercial entity, they will I think they will definitely transfer that in the lease rental. I mean, because as a lessor, you have your costs, and then in order to make profit from the lease, you will pass on the rental amount in order for you to recover your costs and still make some profit, right? So that's another thing. So how they address this concern by the industry, there are two different approach, like in Malaysia as compared to, let's say, in other parts of the world, like Middle East, for example. So in the Middle East, I think the way they do it, because the bank does not want to have all these hassles of doing all the maintenance, making sure there's proper takaful cover and whatnot. So they appoint the customer as an agent to do all the servicing. They call service agency agreements. So the customer will be their agent to service, maintenance, everything, including taking for takaful, so that the rental will still be the same, not more than a conventional lease, because they don't charge it yet. But then at the end, because normally they do this for this so-called mutahiyah bitamlik, or like financial lease, so the customer will buy the asset back from the bank. So they will actually calculate those expenses spent by the customer as an agent of the bank as part of the selling price to the customer. So you can see that at the end of the day, although it's the bank who is technically doing all those things, but they are actually transferring back the cost to the customer when the customer buys the asset from them. Okay, so that's the approach by those who are saying that they are not going to allow for the bank to transfer the risk to the customer in the agreement itself. Okay, now in Malaysia, initially the draft of the ijara standard draft says that, is that they don't transfer that risk. Okay, and then they come out with this argument that actually in terms of the whether the agreement to transfer some of the job to the customer can it be considered as part of hurriyatul ta'aqud, the freedom of the parties to make contract, also put terms and conditions. Because if you look at the sunnah, there's a hadith of the Prophet SAW, al-muslimuna ala shurutihim. The Muslim, they are bound by their terms and conditions in the contract, illa syartan ahalla haraman aw harama halal, except a condition that permits what is prohibited or prohibit what is permitted. So they look at if the bank and the customer agree that the customer will take up the takaful instead of the bank, because takaful is considered as more related to ownership, so it should be on the bank. But then the customer agree to actually take it on their own, because if the bank if the bank takes it, then they cannot choose, and then they cannot, let's say, then no claim discount, a number of other things. Yeah, so they so basically that's whether that's allowed, or is it going against the very essence of an ijara contract. So I remember at the Bank Negara, the team actually did a thorough study about what is the muqtada al-akad, the essence and the real purpose of an ijara contract. Basically, it's about enjoying the use of frag and others, and they list a lot of things, and they see whether taking takaful is that if the customer agrees to take up the cost of takaful cover, for example, that negates the muqtada akad of ijara. So finally, after a long discussion, they come to the conclusion that no, it doesn't go against muqtada akad, because it actually reinforced, because when you have takaful, the asset is covered, and then if something happens to the asset, it can be repaired and things like that. So it reinforces the customer's ability to enjoy the use of the asset, and it doesn't look really good like denying the ownership, because the bank still own that. Let's say in the situation where the takaful is not covering, because although you do a takaful cover, but sometimes certain thing that you don't really foresee, and suddenly it happens, and it costs destruction to the asset, and it's not covered by takaful, there's still a residual risk that the bank actually take as the owner. So it doesn't take away the full ownership risk from the bank. Okay, so that's from that analysis. I mean, people can have different view in this regard, but this is the conclusion from that study. And because of that, and also like maintenance also, originally it's for the bank to do the maintenance. But what if the customer agree that, okay, I will take up the maintenance? Okay, you have the lessee saying, okay, it's okay, I will just change, I will just do the renovation of or the repair of this, and I will just bear the cost. It's okay. Okay, so if it's actually agreed by the lessee, does it go against the muqtada akad of ijara? So we again do a thorough study of that, and finally they come to the conclusion that no, it doesn't go against the essence, because the ijara contract can still stand. So, and the benefits can still be enjoyed by the parties. So then, if you look at in the ijara standard, they give option. So it's up to the parties whether you want to appoint customer as your service agent, and then later you want to charge the cost in the selling price later, just like in some of the Middle Eastern countries, they do that. Or you want to immediately in the contract agree that the customer will take up those costs, so then there will not be any other I mean, you do not include that cost again in the selling price later. Okay, so that's the option to be given, and both is still considered as Shariah compliant if you look at the ijara policy document. That's the latest position in Malaysia after a lot of discussion, and then that allows for the risk weightage to be reduced, and some banks still can continue to do ijara if they want it.
I see. Okay, so on that last point, right, you said if the parties agree to it, then it's fine. If the lessee is willing to take up these maintenance costs, then it should be fine, right? But obviously, we know the difference between stipulating it in the contract and having an agreement of, oh, never mind, I'll take care of it, right? So is it the case that it can be stipulated in the contract, and if it is stipulated in the contract, therefore the lessee would be liable, right? Where there is maintenance that needs to be done, right?
Yeah. Because the understanding of stipulation in the contract is agreed by both parties, right? But actually, if we my expectation is that the Shariah committee, when they go through the contract, they have to see the wordings of the contract, basically. So normally, when I advise those kinds of ijara, I would say that the lessee agree. We don't say that the lessee shall take the takaful, because when you say shall, it's like you're not sure whether it's based on the agreement. Okay, but if you say the lessee agree to take up or to bear the takaful cost, they take up and bear the cost of takaful. So that means you expressly say that the lessee agree, and if I'm the Shariah advisor, I will actually ask the bank to make sure that this is explained to the lessee. It's part of good governance that and also good customer disclosure that you need to highlight those things in terms of obligation of the lessee, and actually tell them they have the option. If they don't want to do that, they can be the agent of the bank, and then the cost will be actually becomes like this and like that. Okay, so because this is the option given in the policy document, right, in the Ijarah standard. So this is what is expected. But I don't know in reality in terms of how it's implemented in the Islamic banks. But I hope they understand this, the spirit behind that. So that is basically is based on voluntary agreement by the lessee. So if they don't agree, then the bank can have another choice that they make the lessee as their service agent.
Okay. Yeah, I think that's clear. Okay, so I've had a long list of questions, but I think due to the shortage in time, and by shortage I mean I really want to ensure we give just adequate time for the participants to ask questions. And so I'll just jump straight to the last question that I had over here, which is the following. So it is understandable based on what you're saying that we're competing against the conventional world of finance, right? And in essence, the world of finance promotes financial stability, right? It's not a bad thing. It is financial stability. We all want financial stability, right? In the words of Prof. Ziad. Based on all we discussed today regarding Islamic finance legal documentation contracts, if you could give a keynote address, let me say, to Islamic finance enthusiasts, whether it's students, professionals, regulators, and everyone, what would your message be to those who say that the legal documentation in Islamic finance contracts is no different from those of conventional contracts, right? Do you take the stance that it is completely different? I know we've had a thorough discussion from the beginning. You highlighted that there are fundamental differences in terms of the deeper aspect of things rather than the surface, right? But what is your stance on this, on the matter? Are they different as it stands today? Is there a lot of work that needs to be done, or do we have little work to be done? Just what is your stance on this? Just to give.
Okay. One, I think is different. Okay, it's different because the first one is loan. This one is maybe a sale contract, sale and purchase contract. It can be leasing contract. So there would be always, if talking about sale and purchase and leasing, there must be assets. So you cannot have Islamic financing without the asset that you're going to buy and sell. Okay, and for leasing you must have the asset. So I have one case that I've advised personally. There was this bank providing leasing to this customer, and it's actually some equipments. And there was this in one instance, actually this equipment was damaged beyond repair because there was a strong lightning, and then it actually caused damage. The equipment cannot be repaired, and that actually means the bank no longer has the asset, so they have to terminate the lease contract, and the bank has to actually bear some of the losses. I mean, of course, if you're talking about takaful coverage and whatnot, but that actually, if you're talking about a conventional loan, then basically they will just continue to ask you to pay the interest on the loan until you pay fully the amount that you have under the loan, regardless of whether you can still enjoy the use of the asset or not. Okay, so that's another thing. And if you look at conventional loan agreement, also I've seen that they call it hell or high water clause. Basically, regardless of what happens with the asset, you still have to pay the rental or something like that. And the Islamic cannot. I mean, the asset must be there, giving the user fraud. If there's no more user fraud, then there's no justification for you to charge rental to the customer. So we have seen in one instance, like the Syria case also in Oman, and you remember, I think last year they had, or this year they had this very bad flooding, and I think the bank actually have to exempt the customer from paying rental because the houses were actually covered in flood and they could not actually use the asset. So if you look at the detail, actually there's a lot of difference because of the different contracts. Then another thing is, if there is default under conventional, they will actually charge you interest, and then the interest can be compounding. And then they don't look at whether the default is because of your financial distress or without financial distress, they just charge you. The interest will be compounding. Under Islamic, we look at two scenarios: whether the default is due to financial distress or is due to just delinquency. You're not disciplined. So if you're not disciplined because of financial distress, there will be some kind of discipline to be imposed. So basically, we have two types. One is actually we call gharama, which is just a penalty to discipline. And this amount will be donated to charity for the banks who want to charge gharama. The other one, we call it ta'wid or compensation. This is where you have to, the person defaulting, we have to reimburse the bank for actual expense or loss that the bank incurred due to the delay or due to the default. Okay, this is not like opportunity loss. It must be actual expense. And in Malaysia, the bank negara regulated that, so they have a formula on how to calculate the actual loss under the ta'wid. Anything more than that under gharama, we have to be donated to charity. Okay, so these are some of the examples of the difference. So if you look at during the COVID-19, we have the moratorium, mandatory moratorium, 6 months. And then we see there's actually all these differences then, because when there's moratorium, the customer is going to pay or delay by 6 months. So the commissioner, definitely they're thinking of, we are going to compound the interest. Although we give moratorium, but at the end we are going to compound the interest. So under Islamic Bank come back to Bank Negara asking whether they can include some kind of calculation to sort of reflect something like compound also. But Bank Negara, we have a lot of meetings and we said no. You cannot actually take into consideration that into the profit of the subsequent months. So basically you cannot add on that and you cannot compound. You are muted.
I'm muted, yes, sorry. Yeah, so I think you've highlighted clearly that there are differences between Islamic finance contracts and conventional contracts. You mentioned, for example, the issue of one is the nature of the contracts. One is based on loan, whereas the other is based on an asset, right? And if it is based on a loan, then it matters not what happens to the asset. You just need to pay back the interest payments as well as the loan sum itself, right? I forgot the term, but anyways, right? Yeah. So one is based on loan, the other one is based on a sale, right? It's based on an asset, right? Therefore, in instances of force majeure, right, where things happen beyond the control of the parties, right, the treatment of the financial institution would therefore be different, right? When it comes to default, right, the penalties that apply, the compensation that could be claimed, these are clearly different, or they should be different at the very least. Hence, there is a clear-cut difference between Islamic finance contracts and conventional contracts. That was my last question, but I think let me try to squeeze in one more question if that's possible, Prof. Engku, before we open up the floor to Q&A. Can I do that? Can I just lawfully squeeze in a question?
Leave it to you.
Yeah, okay.
I'll leave it to you, yeah. Until what time are we having this one?
Okay, sure, inshallah. Just very, very quickly, right? So we know that on an international level, when it comes to cross-border transactions, right, we know that different countries, different jurisdictions apply different regulatory and Sharia frameworks, right, within their Islamic finance industries. How much do you think the difference? How much do you think there being a difference in regulatory? And let me say, how much of an impact do you think the lack of standardization of Islamic finance contracts has contributed to the perception or the contention, right, that Islamic finance contracts are non-compliant, or that the Islamic finance industry is not operating differently from the conventional world of finance, right? The lack of standardization. I was hoping you could address that particular issue.
Not sure whether I can understand your question
Sure.
properly, but then I would like to say that, yeah, I mean, different country have different laws, like you said. Like, for example, we have countries with no tax regime. In Malaysia, we have tax regime. Definitely, their product will be different. I mean, they can do certain products that we cannot do here because of they don't have tax. So whether you do buying and selling, or you do leasing, or you do partnership, because you don't have tax, I mean, it doesn't really matter. It doesn't, you don't have to pay additional tax. But here we have to be careful. Sometimes we cannot do certain transaction because of the tax. But even then, in Malaysia, we have tax neutrality regime. So basically, we are saying that, well, in general, we're not going to tax the Islamic financial institution more than a conventional financial institution. But sometimes when the tax authority are not clear on certain things, they will always play safe and say we will tax you first. So that is a kind of I mean, you're not sure whether you're going to get in reimbursement later, right? So that's the issue. If you're talking about country which don't have any tax neutrality and they have tax regime, some Islamic financial transaction cannot be done at all, because I mean, it can be done, but you have to incur a lot of cost, and it will not be nobody will actually go into that because it will be too costly. Because let's say when you buy, you have to pay tax. When you sell, you have to pay tax. When you lease, you have to pay another tax. So they have to do certain things that maybe some people said that, well, maybe that would be not really compliant. I'm not sure. There was one transaction that I know in a jurisdiction where they have all these tax issues. So if you declare it as dividend, it's taxable. If you declare it's an interest, it's tax deductible.
Oh.
Okay. So although they do an Islamic transaction and it's actually a profit sharing, they name that profit sharing as interest rather than dividend, because they don't want to overburden the parties with tax. When actually it was meant to be an alternative to a conventional where they will charge interest, and it will be tax deductible.
It's called interest profit.
Yeah, just called interest, not dividend, because the issue of the law.
I
Yeah.
see.
That doesn't make it like, I don't think it make it any less Sharia compliant, because the essence of the contract is the same. It's just that the name, because of I don't know whether you can be charged for tax avoidance or something like that. But in terms of essence, it's actually similar financial product behavior with in terms of the purpose, is like the conventional, like a bond kind of transaction. But it's a sukuk, but they have this partnership contract, so they are actually essentially sharing profit. But then under a bond issuance, you will not be taxed. It will be tax deductible, but the interest will be tax deductible because it's an expense. Okay, so
therefore, standardization of Islamic finance contracts, are you for it? Are you against it? Or not?
Because standardization of Islamic finance contract is different. I mean, you're providing standards on the rules and whatnot. So I think that is a good move, but you have to allow for some of flexibility where you have the basic standards, but then you can allow for flexibility to adapt based on individual countries' jurisdictions, specificities or peculiarities. Yeah.
Okay. So recently I heard a speaker at a conference say we should not focus on standardization, but rather we should focus on institutionalization, right? Where you have regulatory bodies in these respective countries with authority coming up with their respective set of guidelines and rules, rather than putting everyone in one bundle and saying everyone has to follow this policy document for Rabiah, everybody in the world has to follow this policy document for Ijara, and if you don't follow it, then it's Sharia non-compliant. So you're saying you're leaning towards the regime that claims that each country should have its version of Islamic finance documentation, provided obviously it complies with the Sharia's underlying principles, the spirit of the Sharia. But we do have to take into account the circumstances, the customs, the traditions, and the practicality of, as you mentioned, for example, where in some cases tax is going to burden the consumers, the participants in the Islamic finance industry. Hence, it might be wise to adopt a different strategy rather than focus on trying to standardize everything.
I think I have to be pragmatic here.
Okay.
We have to be pragmatic, yeah. Because like you said earlier on the beneficial ownership, legal ownership, that's recognized in common law jurisdiction. It's not recognized in civil law jurisdiction. Civil jurisdiction only have one legal title. You don't have beneficial title. They don't recognize beneficial ownership. So then if you have a document that talks about beneficial ownership, it will not be applicable in the civil law jurisdiction. I mean, it doesn't make sense, you know. So we have to be pragmatic. You know, certain things which is meant for just even for legal, strictly legal, they will have, you know, if you do in certain country which have different law from the country of the other party, then you have lawyers of that jurisdiction, you have lawyers for the international law, you have lawyers for the other jurisdiction to make sure that you are complying with all the law. You don't have like a standard thing for everything. So maybe if the land is located in and Kenya, for example, you have to follow the law of Kenya, but the document is regulated by English law. You have to have English lawyer there. But let's say you have some other transaction where you refer to Malaysian law, for example, then you have another Malaysian law lawyer. So that's different. But if you're talking about domestic, for your own country, obviously, there's no need for standardization in the sense that, I mean, it's for your local people. So as long as you have all the law in your country complied with, like we have for our Shariah standard policy documents, I mean, it applies for Islamic financial institution in Malaysia for our domestic transactions, that's fine. But if you're talking about certain transaction where it's cross-border and participated by everyone, it makes sense to have a standard document, like you have the tahawud. The tahawud that you have the standard the standard tahawud document where they have actually the cooperation, right, between IFM and also the ISDA, right? So they have that standard. So it makes sense because it's more like a global transaction, cross-border. So you need to have a standard document so that it is understood by all the parties and you don't have issues later.
Okay.
So that's I mean, we have to be pragmatic.
Understood.
If you have certain regions, Asian, they want to have a standardization within Asian region first, that's fine. Because in a way, a lot of us have like a lot of commonalities as well in the Asian region. Maybe yes, maybe not in some areas. So if possible, maybe you want to have that. Like GCC, they may have some kind of standardization, and a lot of the GCC now adopting AOF. But there's still a big player like Saudi Arabia not adopting AOF. So still, there are one is being pragmatic in terms of legality and whatnot. So another one, we have to recognize the political sensitivity, sovereignty issues, and all those things as well.
Wonderful. Okay, so we need to be pragmatic. That is the caption of the.
What is important is the Sharia compliance, and then I think we have things that is muttafaq alayh or mujma' alayh. So this we cannot have any compromise. But of course there are some furu', the things that is subject to differences of opinion. I think that one we have. This is kind of rahmah also, because different places may have different contexts and needs in that sense. Yeah.
Okay. All right. Jazakallah khairan, Prof. Engku. We don't have much time left, but inshallah, I'll run through some of the questions. Perhaps you could enlighten the participants, myself included. Okay. So the first question, I'll pose the questions based on the relevance, inshallah. First question I see over here is by Brother Ali. He says from TYC Finance Limited. He says, Salam, this is Ali, and we would like to know, right, is there a standard template agreement in Malaysia for bilateral loans and borrowing that complies with Islamic finance for reference? We would like to make a Chinese version for Chinese Muslims to use and refer to. The question is there a standard template agreement on bilateral loans? That's what he's asking in Malaysia.
Yeah, I'm not sure what you mean by bilateral loans. Can Brother Ali explain to me?
Brother Ali.
Assalamu alaikum.
Oh,
salam. Yeah.
Yes, Brother Ali.
Yes. Assalamu alaikum. I'm from Hong Kong.
Yeah.
We are I think, only Islamic finance promoter in the region.
Okay.
And we have a lot of Muslims in China, but they cannot access all this information because there's no YouTube and Google. So we are in Hong Kong. We try to produce some materials because there's a lot of materials we can access, and we are always be asking, the interest-free. This is the essence for Islamic finance. So for normal people, for general Muslims now, they have more kind of awareness. So during their daily life, they want to borrow money. They want to avoid the involve any interest. So is there any kind of templates for Muslim, like a bilateral between like a private or even like company, if they really want to follow the Islamic way, they want to lend the money to the other parties. So how they can practice, how they can really have a more official. Is there any official kind of a Malaysia versions? I saw some because we do some research. We saw there's a Pakistan version, but this is very simple. Maybe they just list out some patterns like profit sharing. After you make profit, then you make a sharing. Then you make a loan. But I want to know whether is there any standard templates which we can make a Chinese translation and put on our website, because we have a lot of followers in China, so they can make a reference when they have their daily life, when they want to borrow money to other parties, so they can make a reference.
Yeah.
Thank you, Brother Ali.
Thank you for that clarification. So, what I know, as far as I know, I don't think there's any standard template. If you're looking at banks, normally they have within the bank, maybe they have some templates for their own internal purpose, but they don't really publish it for the public use. And then another thing, because for Islamic financing, it depends also on the purpose of that contract. So let's say, like you say, they want to borrow, but then we have to look and say, is it for business purpose? Maybe for business purpose, maybe you can go for Moderator, if you want to go 100% money capital given, or you can go for Musyarakah if the person will put some capital, and then the financier will put some capital, right? So Mudarabah will have different template as compared to Musyarakah. And then if you just actually want to do for home financing, maybe there will be different lah. Normally it will be like Murabaha, or you have kind of istisna if the house is under construction. If it's actually for leasing, then you have the ijara, right? So there can be different ways lah. When you say like borrow, is quite a generic term. Under the consent, they can use borrowing for everything. But under Islamic, we need to be more specific, and each specific purpose, normally we will match it with a more suitable contract. And then each contract may have its own like key elements that should be there in the template, but I think it's not really something which we have like offhand on the shelf in Malaysia. So perhaps it's good if you can speak to some of the legal firms in Malaysia, if you can engage them as your consultant, so that they can actually do a template for you based on your specific needs lah. Because I think maybe you have some specific needs, maybe for equipments, maybe for a house, maybe for business, maybe for trade, export, import. So we have different products. So it's best to get engage a consultant, maybe a lawyer, to do something that can be customized, and then you develop a template from there.
I see. And Prof, on that question, so you mentioned a few. You mentioned Mudaraba, Musharaka, you mentioned Murabaha, Ijara, Salam. All of these are unique contracts in their features. Are there templates, right, standardized templates available for the public? For example, Brother Ali, that he could refer to?
Yeah, that's what I said. There's no template. What we have is just the policy document, the Shariah standard. So when we have the Shariah standard, actually it will become easier. So then when the lawyer draft, they will actually refer to the, say you want to do salam, then there will be a Shariah policy document about salam, and then you will actually follow, or Murabaha, you will follow. The main things, basically you have to include all the requirements of Sharia under the policy document, then you are quite safe lah. Then once you have got that first draft that meets your requirement, then you can use it for other transactions as well.
Wonderful. Okay. Brother Ali, hopefully that answers your question. So you have to reach out to a field expert, right, an Islamic finance advisory firm, a lawyer that would perhaps address your question more directly, right? Prof. Engku and the team, right, whether in Bank Negara, whether in the Securities Commission, they have developed policy documents that would facilitate for lawyers or Islamic finance advisory firms what the parameters, the regulations are, and then it is up to those lawyers and the advisory firms to then structure the product or to draft the agreement that you seek, inshallah. All right.
Thank you.
Have you seen the policy document, Brother Ali? The contracts?
To be honest, we see some templates from Pakistan, Bank of Pakistan, but it is only like 3 pages. It's very simple. They would like to put all that, what you mentioned, the structure in the attachments. So but the attachment is empty. There's no very detailed. But we believe it is very important to let the Muslims to have a market awareness. Okay, there's a kind of very practical way we can really make a borrowing interest free. So actually, we are trying to produce something relies on the current bilateral agreement, because in the modern life, people have very standard borrowing templates. So we try to to make amendments and to put a very simple kind of message and to let them know what is a Shariah perspective, what is the basic idea about like a profit sharing, and what is a ijara. We put a very simple terms, give them option, let them to further amend this template. So we want to produce that, and we want to
that's
put
a very good thing. Yeah,
that's so very good. For reference only, and to let have a to build the credibility for this contract, because the borrowing money is sometimes have a lot of conflict. So we even put the tasmi on the top of the agreement, and we put the witness at the end. We add the witness. So we also put the Islamic calendar date, etc. So we try to build something which is more pragmatic way to let people to understand Islamic finance. So this is our approach.
That's
good. If you have any templates, maybe in the future I can check with some other Malaysia consultant professional team, so we can further amend our templates. And inshallah, in the future, we can publish in our website and to give to our user for reference only.
I think you can also refer to the various policy documents by Bank Negara on the contracts. So at least you know what are the rules for each contract. The policy document on Rabiah, for example, policy document on Ijara, on Mutarabah. So we have 14 different policy documents for 14 different contracts. So you can take a look at that, and you can also look for the structures.
They can check from the Bank Negara website, right?
Yes,
okay.
yes.
Thank you.
You just Google, Bank Negara Malaysia.
But I think it's very difficult to combine everything in one template. So maybe what we believe is we give them a very simplified version, and just give them the idea, then to let them to understand the principle. That's it.
And then you also read the book, I think published by ISRA or INSIF, the Islamic Financial System. In there, they can also give some structures of the what has been done before in terms of the financing, the structures, the transaction flow. So based on that structure, you can try to see which contract that is suitable for your need, and then you can develop like a few templates, maybe for using Rabiah, using Mudarabah, using Musyarakah, something like that.
Thank you for your guidance. Thank you so much
for that question. Thank you very much, Prof. Engku, for engaging in the discussion. I think we'll end it with one last final question, inshallah. I see a question over here by Brother Ahmed Izzat, I think it's more the correct pronunciation, right? So he says here, Prof, this is not very related to the topic, but it is still within the ambit of Islamic finance, and hopefully Prof. Engku would like to chime in. So, Prof, how about late payment charges on school fees? Right? Does it have the same hukum and application as Islamic banking? Right?
Okay. I think for late payment charges for school fees, I think the context is a bit different, because for Islamic, because their costing take into consideration their cost as Islamic bank lah. Okay, so maybe the costing for the school would be different. I mean, the actual cost. Let's say you have a late payment. Firstly, you have to see whether, because if you look at the Quran, it says وَإِنْ كَانَ ذُو أُسْرَةٍ فَنَاظِرَةٌ إِلَى مَيْسَرَةٍ. This is talking about debtor-creditor relationship. This is in Surah Al-Baqarah, I think, where Allah SWT said if the debtor is in ذُو أُسْرَةٍ, in the financial hardship, فَنَاظِرَةٌ إِلَى مَيْسَرَةٍ, you have to give leniency, give more time, extension of time. But in the hadith of the Prophet ﷺ, the Prophet said the number of narration, لَا يُلْوَجِدِ ظُلْمٌ. The person who has the means to pay, but he delay, because of indiscipline, intentionally delay, is injustice. And in the hadith, the Prophet said, يَحِلُّ uqubatu, you can actually punish the person if he delay without any justifiable reason, not because of financial distress. So first, the debtor has to be disciplined, has to pay on time. So if you just delay because of indiscipline, you can punish the person. So in the past, they punish not financially lah. Sometimes they the court order for whipping or imprisonment so that the person will pay. But now I think you can actually get, if the school has spent some money, let's say you sell letter, you have postage, or you have to engage someone, pay the person to get you to pay. So you can get the person who default to reimburse you for whatever actual cost that you have incurred because of the delay. If not, if it's because of a financial hardship, then you have to give extension of time, and then you need to ask whether any problem, maybe you can help against some kind of crowdfunding to help or something like that. This is my advice. I'm not sure whether I've answered you, Brother Izzat.
Yes, I think you've answered. Hopefully, it's clear to the viewer. You're saying that the school can't just charge a fee or a late payment fee for the sake of gaining financially, but it should be to make up for the losses, right? Administrative.
For losses. But if you want to make a discipline, maybe you can do less kind of a zajr or something like a deterrent. You can say, like, if anyone actually make a late payment, then the person commit himself to make a donation of a certain amount. The donation will go into like for helping the orphans or something like that, Yeah.
Okay. Or they could put the student's name on the board saying that this so-and-so student has yet to pay their fees. That would be...
You are defaming the student, but not the parents.
Oh, yes.
Those who are in fault actually is the parents.
That is true. I actually didn't think about it like that. Okay, so let's avoid defaming the students' schools, please, inshallah. Okay, so we have one last question, perhaps. I think it was my fault. I didn't mention to the participants that they would have to write their...
But now, before that, about defaming, I mean, the Prophet said you can actually expose the person who default, the father, not the student.
Not the mother, Okay. Wonderful. Okay, so last question, as I mentioned just now, I believe I forgot to mention that the questions would, the questions have to be typed out rather than voiced out, right? So I do apologize to the participants. Perhaps there were some people who were, ready to ask their questions verbally, but then, I expected them to write it, but I didn't mention it to them, so my expectations were wrong. So for that particular reason, I will open the floor for one question for anyone who would like to unmute themselves to ask one concise, precise question, if there is anyone. Concise and precise is the key word. Any last words, last questions? Anybody? This is a golden opportunity. Here's Prof. Engku. I think they're upset with me already. I'm really sorry, brothers and sisters. Should have made it clear earlier. Maybe there are no questions. Which one is it? Okay. I will assume husn al-dhan for myself that everything was clear and there are no questions and no one is upset, inshallah. So if that is the case, we have finished 5 minutes above time. We have stolen 5 minutes from Prof. Engku's time. So for that, I would say, Jazakallahu khairan, kathiran, Prof. Engku Rabiah, for taking from your time to sit down and have this discussion, right, in the form of a podcast. We've learned a lot, right? By we, I mean myself, the team, and Adil Advisory, the participants that are here as well. It has been a very fruitful session, very profound discussion, and hopefully many more in the future. We wish you nothing but the best in all your future endeavors, right? We recognize and give you your flowers for all your previous accomplishments and many more that are to come, bi'idhnillah. And we say thank you, right? We honor you, Prof.
Thank you. My pleasure. Thank you for